عليكم ورحمة الله. In the name of Allah, the most gracious, the most merciful, praise be to Allah, and peace be upon His Prophet Muhammad, his family, friends, and the followers until the day of judgment. This is the last lecture in this term, inshallah, and we are going to solve some problems on chapter 2. Chapter 2, as you know, deals with dividends, either cash or stock, and retained earnings. We have two problems, actually, like last chapter, and we are going to discuss both of them and to try to solve both of them as well, inshallah. And we will speak about some points when there is need to speak about, inshallah. So this one, as I said again, it is solving some problems. There is the first problem, or problem number 1, on January the 1st, 2010, X company had the following stockholders equity section, and he gives me some balances. Common stock $20 per value, 60 shares issued and outstanding, and paid in capital in excess of par value, and the retained earnings. During the year, the following transactions occurred. The first one, February the 1st, declared a $1 cash dividend per share to stockholders of record on February 15th, payable March the 1st. As the record date, I said this one is not important for you as a student, because this is in the books or records of the company to know who is entitled for the dividends. But the important for us as accountant is the date of declaration and the date of payment. So this is February the 1st, date of declaration. Declared a $1 cash dividend per share to stockholders of record on February 15th, payable March the 1st. Then we have to make a journal entry in this case, because he gives me these transactions during the year, and he asked me for 3 requirements. The first one, journalize the transaction and the closing entry for net income. Number B, enter the beginning balances and post the entries to the stockholders' equity accounts. And the third one, prepare stockholders' equity section at December 31st for the company. This is the 3 requirements for this problem. Then we'll start with the first one, A, the first transaction, February the 1st, the declaration of cash dividends. We have, as you know, 60,000 issued and outstanding. So we'll give all the 60,000 dividends or cash dividends. So 60,000 multiplied by $1 per share, it gives me 60. So cash dividends 60,000, and I told you how to compute it. The number of shares outstanding multiplied by the dividend, the cash dividend per 1 share. It gives me 60. It would be debit, and the credit would be dividends payable 60. So 60 cash dividends and 60 dividends payable. Dividends payable is credited with 60. This is the first transaction in the date of declaration, February the 1st. When we come the date of payment, March the 1st paid the dividend declared in February. Then we'll pay it in this day. So as I told you, and when we say pay, it means cash will be credit. So, and the obligation, dividends payable, because I told you that when we declared, then the dividends will be payable, will be an obligation. It should be paid, or it must be paid, because this is like any obligation. So it is dividends payable. So on March the 1st, date of payment, then dividends payable will be debit for 60,000 and the cash will be credit for 60,000. This is the journal entry in the date of payment. Dividends payable, cash. Dividends payable, debit, and the cash credit. Then we come to April the 1st, announced 2-for-1 stock split. Prior to the split, the market price per share was 36. As I told you, we don't need the market price per share in the stock split. Just all what we need, we write a memo. We don't need any journal entry in this date. We just write a memo. This memo we write like this: April the 1st, the date, and this the memo. It is in the journal as well. Memo, MEMO, memo. 2-for-1 stock split increases number of shares to 120,000. It means 60,000 multiplied by 2 and reduced by value to 10 per share. This is the stock split. It doesn't need any journal entry. What is needed in is a memo in this date. Then we come to the next transaction, July the 1st, decided a 10% stock dividend to stockholders of record on July 15th, distributable July 31st. On July 1st, the market price of the stock was $30 per share. I do believe that we don't need all this information. We don't need the stock market price at the date of declaration. Declared a 10% stock dividend to stockholders of record on July 15th, distributable July 31st. On July 1st, the same date of declaration, the market price of the stock was 13 per share. What we need actually is to compute the dividends distributable. What we need to compute the dividends distributable. We have from the data given to us 60 shares issued and outstanding. So 60 and the bar value is 20, then the common stock is 12,000. Stock dividends, they decided to declare 10% of stock dividends stockholders of record on July. This time 10% of stock dividend. We have 10% of this amount, 1,200,000. It means 12,000. 12,000 and the market price of the stock was 13 per share. Actually, in this case, we need the market price to issue the shares. So common stock would be issued, as you know, as the par value, but the stock dividends will be computed by multiply the 10%, which is 12,000, multiply by 13, the number of the number of shares after we make the stock split. The information given that we have only 60, but when we made stock split, they became 120. So 10% of it will be 12,000 multiplied by the market price 13, then it will give me 156,000. So stock dividends, again, it will be 10% of the 120 shares multiplied by 13, it will give me 156,000. This is stock dividends. And common stock dividends distributable, it will be 12 multiplied by 10. This is the common stock issued, and it will be dividends, common stock dividend distributable, 12,000 multiplied by 10, it will give me 120, and the rest will be the difference between the par value, which is 10, and the 13, which is the market price, the amount we issued the shares on it. So it will be 3. 13 minus 10, the par value will give me 3. So 12,000 multiplied by 3 will give me 36,000, and this is paid in capital in excess of par common stock. Again, this one, the stock dividends, 12,000. 12,000 is 10% of the 120 shares multiplied by 13, the stock, the price of the stock at the date of declaration. It will give me 156,000, and common stock dividends distributable, it will give me 12,000 by the par value, which transferred to 10 after we make the stock split. So it will be 120, and the difference between the par value and the stock market price which we issued is 3. Then we multiply 12,000 by 3, it will give me 36,000. So again, 156,000 debit, and the credit is common stock dividends distributable 120,000, and paid in capital in excess of bar common stock 36,000. This is July the 1st. So we shouldn't forget at the end of the year at the end of the month, sorry, at July, because he said July 1st and July 31st. July 1st he declared, and this one will be distributable by July 31st. So July 31st, common stock dividends distributable 120, common stock 120. Again, in the July 31st, common stock dividends distributable 120, and common stock 120. This is what we call payment or distributable of common stock dividends. Then he said here, July 31st, issued the shares for the stock dividends. Then he issued the shares, the one I mentioned, common stock distributable, common stock dividend distributable, common stock. Common stock will be a credit as usual. It is by nature, it is credit. So it will be a credit, and the debit will be common stock dividends distributable. Because this one, when we declared common stock dividend distributable was credit. So in this case, it will be debit, and the common stock will be credit. Please note that common stock dividend distributable, when we declared on July the 1st, it was debit, and in this at the end of day of distribution, which means the day of payment, common stock dividend distributable 120, it will be debit, and the common stock will be credit. Then the last transaction declared 0.5 per share dividend to stockholders of record on December 15, payable January the 5th, 2011. This is the date of declaration, and as you know, we should make journal entry at the date of declaration and the date of payment or distribution. Here he declared cash dividends, declared 0.5 per share dividend to stockholders of record on December 15, and it will be paid in January 5th. Then we'll compute the cash dividend step by step. First, we have 60,000 shares issued and outstanding. Then we make stock split. The 60 became 120. Then we make stock dividends in July 31st. Then the number of shares became now 132,000. 132,000. It consists of 120 and 12 thousandths. Then cash dividends 132,000 multiplied by 0.5, it will give me 66. This is cash dividends, and dividends payable will be credited with the same amount, 66. Again, on December, the date of declaration, it will be cash dividends 66,000 debit, and dividends payable 66,000. Dividends payable, as you know, will appear in the balance sheet of December 31st at the end of the year. It will be appear as an obligation in the current liabilities, dividends payable for 66. And in the 5th of January of next January, it will be distributed. Then 31st determined that net income for the year was 350,000. So we'll close the income summary. Income summary 350,000. Retained earnings 350,000. And we'll make the other adjusting entry for both stock dividends and cash dividends. Then retained earnings for stock dividends 156, retained earnings 156, stock dividends, all in the at the end of the year, 31st of December. And the other one of retained earnings 126,000, retained earnings debit, and the credit will be cash dividends 126,000. So 3 adjusting entries at the end of the year to close income summary. Again, income summary debit 350,000, and the retained earnings 350,000. And the other journal entry as adjusting entry, retained earnings 156, and stock dividends 156. And the last adjusting entry, retained earnings 126, and the cash dividends 126. All the adjusting entry at the end of December. So we finished now the journal entry. Again, we have cash dividends in this problem, cash dividends and stock split and stock dividends. We make journal entry at the date of declaration and at the date of payment, because we have 3 dates in dividends: date of declaration, date of record, and date of payment. We are interested in the first and the last, but the one in the middle we don't care about it. Just this is to organize which is entitled for these dividends. So, and also we have stock split in this problem. We don't make any journal entry, but we make a memo, and in the memo we explained everything. In this example, 2 for 1, maybe 3 for 1, or 4 for 1, or whatever. We mentioned the percentage and this increased number of shares to the determined amount in this case 120. It comes from multiply the number of shares by 2 and reduce par value to 10 per share. And also in this one we have stock dividends, and the stock dividends at the market price, and then we stock the new number of dividends because they became 120,000 instead of 60. So 10% of them, it means 12, and the price is 13, and so on. At the end of the year, we make the adjusting entry, which included in this problem income summary, to close income summary, and to reduce the retained earnings by stock dividends, and reduce the retained earnings by cash dividends. Then number B, in this we transfer from, or we post or transfer from the journal to ledger. And as we agreed together last time, we'll use the ledger with 3 columns: debit, credit, and the balance. So we'll use this one. I told you this one is very easy and very simple. We started with common stock. At January, the balance was 1,200,000, and in April the 1st we make stock split. All what change is increase of double of the number of shares and reduce the par value to 10. Then at July 1st we have credit common stock, the common stock distributed, then the balance would become 1,320,000. Then common stock dividends distributable. On July 1st it was credit by 120,000, and the balance is 110,000. And in the July 31 it was debit by 120,000, and the balance is 0. Then paid in capital in excess of par common stock. At the January the 1st, the balance was 200,000, as it came in the information given at the beginning. Paid in capital in excess of par common stock 200,000. Then July 1st, when we issued some shares as dividends, it was credited by 36,000, and then the balance became 236,000 credit. Retained earnings, its balance from the information was 600,000, and then we close the income summary, or transfer the net income, or increase the retained earnings by the net income for the year 350, it became 950,000 credit. Then we decrease retained earnings by both stock dividends and cash dividends. Both are debit. Stock dividends 156,000, and cash dividend 126 dividends. Then the balance became 668,000. Then we come to cash dividends. cash dividends at February the 1st was debit by 60, and the balance is debit by 60, and December 1st it was debit by 66, the balance became debit by 126, and at December 31st it became credit with 126,000, then the balance is 0. So cash dividends is closed, and stock dividends would be as well. In July the 1st it was debited by 156,000, and at December, or on December 31st it was credited by the same amount, 156,000, then the balance is 0. Then the last requirement to prepare the stockholders' equity at December 31st. Again, we shouldn't forget the name of the company, the name of the statement, and the date. The date was December 31st. Stockholders' equity, we have the first part of the stockholders' equity paid in capital, capital stock, common stock after the stock split and the distribution of stock dividends. It became 132,000 multiplied by 10, it gives you 1,320,000. And the additional paid in capital in excess of par common stock 236. This from the account we open for this one and balance it. Then the total paid in capital 1,556,000, and this is the total paid in capital. Total paid in capital 1,556,000. We add to it retained earnings, the second part of stockholders' equity, retained earnings. It is 668,000. We add both together, total stockholders' equity 2,224,000. This is the stockholders' equity section in the balance sheet. Then I very much hope that you understood this one. It is easy, as you said. Just prepare the journal entries first, then post to the ledger and prepare the balance, which we need for common stock, and we need for paid in capital, and we need for retained earnings. Then we should open these accounts: common stock dividends distributable, and paid in capital in excess of par, and retained earnings, cash dividends, and stock dividends, because we need these balances. And then we notice that in the stockholders' equity, it is partial part, because it concentrates also on only stockholders' equity, paid in capital, and retained earnings. So I hope all of you understand this problem, and to help you, I'll give you the solution as well, so you can have the solution. In the first page we have the journal entries, and in the second page we have the ledger accounts in the way I told you about the 3-column debit, credit, and the balance, and then at the end we'll prepare the stockholders' equity as a part of the balance sheet at December 31st. Okay, then I will give you another problem just to make more practice, to give you chance to solve many problems, to have many cases in these problems. The problem number 2 in this lecture, the stockholders' equity accounts of X company at January 1st, 2010 are as follows. The preferred stock 6%, $50 par value, common stock 5 par, paid in capital in excess of par value preferred stock 200,000, paid in capital in excess of par value common stock 300,000, and retained earnings 800,000. This is information. It is given to you to help you on what is required from you later. I told you also there were no dividends in arrears on preferred stock during 2010. The company had the following transactions and events, and they gave me some transactions and events and asked me to journalize the transaction and the events and the closing entry and prepare the retained earnings statement for the year and prepare stockholders' equity section at December 31st. Then the new here is to prepare retained earnings statement. How to prepare it? Then we'll start with the journalize the transactions, events, and closing entries. July the 1st. July the 1st. Declared 0.5 cash dividend on common stock. This is cash dividends. In date of declaration, we should make the journal entry. Cash dividends payable. So how we compute it? As the information given to us, we have common stock $800,000, and the number of shares we divided by 5 and multiply by 0.6. Then it gives me 96,000 cash dividends. Dividends payable 96,000. Then cash dividends. $96,000 and dividends payable 96,000. This is the date of declaration, July the 1st. August the 1st, discovered 25,000 under statement of 2009 depreciation. Ignore income taxes. Then there is, as he told us, under statement of depreciation. It means overstatement of net income, as we studied. We know if there is understatement of expense, it means overstated of net income. So retained earnings will be decreased by this amount. So retained earnings would be debit by 25,000 under statement of depreciation, and the credit would be accumulated depreciation equipment. Accumulated depreciation equipment. Then this is period adjustment, as we studied. Retained earnings will be decreased by the amount which under statement of depreciation, and you know depreciation, it is an expense. So it means again it is overstatement of net income. So the retained earnings will decrease by this amount. Retained earnings debit and accumulated depreciation equipment credit 25,000. Okay. Then September the 1st, paid the cash dividend declared on July the 1st. The amount declared on July the 1st, it would be paid. This is the date of payment. July 1st, the date of declaration, and September 1st, date of payment. So so dividends payable, cash. Cash, when we paid, means the cash is credited. Cash is credited with 96, and the debit is dividends payable because we are going to pay the obligation, the payable. So dividends payable debit and cash credited. Then December the 1st declared 10% stock dividends on common stock when the market value of the stock was 18 per share. So we'll issue this one at 18 per share. So stock dividends it would be 40,000. Sorry, 24,000 multiplied by 18 will declare 10% of stock dividends. Stock dividends number of shares, it would be 24,000. 24,000. This is 10%. This is the 10% stock dividends on common stock when the market was 18. Multiply by 18 gives you 432,000. This is stock dividends, common stock. This is stock dividends. Then all issue at par. The par value for common stock was $5. Then 24,000 multiplied by 5, it gives me 120. And the difference between the 5 and 18, it would be 13. 13 per share is the paid in capital in excess of par value common stock. It would be multiplied by the number of shares, 24,000, gives me 312. So stock dividends 432,000 debit, and common stock dividends distributable 120, and paid in capital in excess of par common stock 312,000. This is the date of declaration, December the 1st. December 15 declared a 6% cash dividend on preferred stock payable January 15th. Declared 60% on preferred stock. So this is preferred stock. It is 60% as you see in the information given. So cash dividends, dividends payable. Cash dividends, we have 12,000. The preferred stock is 600,000 and the bar is 50. So 600 over 500 par, it gives me 12,000. So 12,000 multiplied by 50 multiplied by 6%, it gives me 36,000. So cash dividends 36,000, dividends payable 36,000. This is at 15th of December, the date of declaration, and it will be payable January 15th. Then it will be appear in the balance sheet, in the obligation, or in the liabilities, current liabilities, as payable at the end of the year. So cash in the 15th, cash dividends 36, dividends payable 36. Then determined at the 31st, determined that net income for year was 355,000. This is to close income summary. Income summary debit 355 because it is a net income, and the return earnings credited by 355,000. And then we make the other closing entries, other adjustment. We have the first adjustment at the end of the year. At the 31st of December, we decrease the retained earnings with both cash dividends and stock dividends. So we'll make the first journal entry at the end of the year. After we close the income summary, we have retained earnings debit and cash dividends debit 132,000. Retained earnings decreased by 132, so retained earnings would be debit by 132, and cash dividends would be credited with 132. Then we'll decrease also retained earnings with the stock dividends 432,000 retained earnings debit and stock dividends 432 credit. This is the adjusting entry at the end of the year. One mentioned determined that net income for the year was 355. This is the mentioned to close the income summary. And the other one recognized 200 restriction of retained earnings for planned expansion. It would be mentioned in the note to the account. If there is any restriction, it would be mentioned in the deed of account. So he told me that we have 200,000 restriction of retained earnings for planned expansion. It would be mentioned in the notes to the account after the balance sheet. Then we finished the journal entries. I very much hope that you understand it. It's easy, as you know. And also, inshallah, I'll give you the solution for it to help you. Then we come to requirement B. We should balance the accounts we have. First, we posting from the journal to the ledger, and then we post this one. And again, we follow the 3-column ledger, debit, credit, and the balance. So the received stock at January 1st, the balance was 600,000 and no change of it. It would be credited by 600,000, and because the received stock is capital, and the capital always or credit, never be debit. Common stock is credited is the same and no change also as well. Common stock is 800, the balance, and then common stock dividends distributable at December 1st, and declare 10% of stock dividends on common stock when the market value was 18 per share. Then the common stock dividends distributable to be credited by 120, and the balance would be 120. Paid in capital in excess of par reserved stock 200,000. It is from the information given, 200,000, and the paid in capital in excess of par common stock. We have the balance 300 credit, and we add 312 credit on December the 1st, then the balance would be 612. Then retained earnings account at January 1st, This is the balance, 800, and August the 1st period adjustment. It will be debit. We'll decrease it with period adjustment because it is overstated of net income in the past. Then it will be retained in will be decreased by this amount, 25,000 debit, and the balance would be 775,000. Then net income, it would be added to the retained earnings, then it would be credited to it. So the balance would be credited by 1,130,000. Then we'll reduce the retained earnings by declaration, either cash or dividends or stock dividends. And we have, in this example, we have both. Then retained earnings would be debit with the cash dividends, 132, and with stock dividends, 432,000. Then the balance at December 31st would be 566,000. This is the retained earnings. Then we have cash dividends. In July the 1st, it was debited by 96,000, and the balance is debited by 96,000. At December 15, it will be debited also by 36. Then the balance became 132. In December 31st, we have credited by 132 cash dividends. Then the balance would be 0. Stock dividends is the same. At December 31st, it was debited by 432,000, and the balance is 432,000 debit. And at December 31st, it was credited by 432,000, then the balance is 0. Then he asked me to prepare retained earnings statement. Retained earnings statement is very easy. Balance at the beginning plus net income minus dividends. But if we have period adjusted period, then we can make it. Then in this problem we have period adjusted period. Then we have balance at January as reported 800, and this is, as you see in the information given, 800. And then we make the correction of happened in the last year. 25,000 would be deducted because it was overstatement of net income. Then the balance in January 1st as adjusted, it would be 775. Then we add the net income, 355. Then it will give you 1,130,000. We'll deduct the cash dividends, preferred, stock dividends common, and cash dividends common. Then the balance will be 566. This is the retained earnings at the end of the year, or for the year ended December 31st. Then in the retained earnings statement, we shouldn't forget the name of the company, the name of the statement, and the period. And as you know, retained earnings statement for a period, not as a date. The last required is stockholders' equity. Then we have the name of the company, the name of the statement, the balance sheet, then the date, December 31st. We start preparing the stockholders' equity. It is in the left side. We have first liabilities and then stockholders' equity. Then he asked only for stockholders' equity. Then the first part is paid in capital. Paid in capital consists of capital stock. This 6% preferred stock, 50 par value, and 12,000 shares issued. Then common stock, 5 par value. Then 160 shares issued, multiply by 5 par value, it will give me 800,000. Then common stock dividends distributable, we have 24,000 shares. This common stock dividends distributable will be added to the common stock. The total is 920,000. Then total capital stock would be 1,520,000. Then the other part of paid in capital, additional paid in capital, in excess of bar preferred stock 200,000, in excess of bar common stock 612. Total additional paid in capital 812. We'll add it to the additional paid in capital. It gives me total additional paid in capital 812. Then the total paid in capital, which include capital stock and additional paid in capital, it is equal to 2,332,000. Then we add retained earnings, the other main part of the stockholders, plus to paid in capital. The retained earnings has a note, but we'll explain it later. Then we add retained earnings to the total paid in capital. It gives me total stockholders equity 2,898,000. The note B, whatever the note number, retained earnings is restricted for planned expansion 200,000. Then the minimum of retained earnings we should keep, it shouldn't be less than 200,000. This is is restricted for plant expansion, and this one is mentioned in the notes to the account. It is mentioned in the notes to the account. This is the solution for this example, and I very much hope that you understand it. So please try to solve it yourself. Please don't look at the solution until you solve it you alone without moving to the solution. And when you face any problem, you can look at the solution, but try to solve it yourself and try to see your weakness either in the journal entries or the posting to the ledger. And if you are not clever in the journal entries, you should have many practice as well. But for the ledger, you should practice on the 3 columns ledger: debit, credit, and balance. It is very easy. But if you don't like it, or if you don't want to use this method, because I will never ask you to follow any determined one or any method for ledger, you can use the T account. But believe me, I do prefer this one because it is very easy. The 3 column ledger, it is very easy, as you see. And then how to prepare retained earnings, it is very easy. The beginning balance, and you can add or deduct the correction, and then it gives you the balance as adjusted. To add net income and to deduct dividends, it gives you the balance at end. Then I think stockholders' equity is not strange for you. In all our problems, we ask you to prepare stockholders' equity. Thank you very much indeed, and best wishes in your holiday and in the exam, inshallah, when the exam will be held after the 12th of February. We hope so, inshallah. All the best. Assalamu alaikum wa rahmatullahi wa barakatuh.